Hi, it's Marco here. So the recession is about to get worse. Why? There are data that actually show that, and that is what this video is about. So the first thing we're gonna look at in this video is data, yes, but what is in particular that is going very badly? Well, the first thing is that this piece of news, the economy shrinks 1.4% in the first quarter. And that's the GDP that is basically tanking, and that is showing basically this trade deficit. That is the reason for this first quarter that is negative, where the economy is shrinking. So basically the question is, at this point now, are we already in a recession? Well, actually the reason why I'm asking that is that because the recession is a period of economy shrinking, yes, but it has to be at least 2 quarters in a row. So that's the first thing. We are not yet in a recession. There are reasons, and I'm gonna show you data in just a second, because the recession, I believe, is gonna get much worse, and I'm gonna tell you even a timeline later in the video. However, first of all, let's have a look at what the potential reasons could be for a recession to actually happen. And let me just share the screen. And so the first thing is potentially a sudden economic shock. So for example, oil. So we're talking about the cut off the supply of oil. Could that be a reason for the recession then? Well, obviously we had something similar and it just moved across, and that's the problem in Ukraine, Russia. So yes, we had something like that, but also look at this one, excessive debt. So we all know that debt is actually very high right now. People have borrowed over their heads, basically, beyond their eyeballs. They have so much debt, and of course that could be a problem already. Then we have another one, the asset bubbles. There you have it, asset bubbles. Who would have thought? And of course on this channel we've been watching bubbles popping, and we're talking about the stock market, of course, but also the next one, too much inflation. Who would have thought? And of course, inflation is something we're gonna talk about in just a second. So basically, the first reason, and this is perhaps the most interesting, is the CPI. So if you've been following the CPI data, just here in the UK as well, but in the US as well, it's like going up so fast. Now, why I think that this CPI data is actually gonna get worse? Well, let me show you in just a second. Well, CPI is an interesting indicator because the consumer price index, which measures changes in the inflation rate, is another closely watched, and this is the deal, lagging indicator. Now, why is this a problem? Because when we saw the increase in inflation, when we saw the massive increase, we and banks were like thinking, okay, banks and the Federal Reserve and all the central banks, they were thinking, okay, we are heading probably to the top. We have reached the top, or we will be reaching it at the beginning of 2022. Those were the estimates, and we were still going up. Then something major happened, and that is, of course, the war in Ukraine and with Russia, of course. So that means that there is even more inflation that could potentially come through, and that's of course my belief as well. That's one of the reasons why there could be more recession coming through. Of course, we saw that the price of basically everything is skyrocketing. Of course, that will bring more potential recession, and again, that's my prediction. We're gonna look at when to buy in stocks, because of course that is our main goal on this channel at the end of the video. So let's have a look at then another potential indicator that will blow your mind. So we all know, and I just shared that, but we all know that recession can happen as a kind of self-fulfilling prophecy, as many things in life. So basically, if you really believe something, I actually shared my screen, but I shouldn't have. So if you really believe that something will happen, guess what? It probably will. Chances are, if you dig hard enough, if you dig deep enough, if you believe it hard enough, you will get it. And guess what? Recession is potentially self-fulfilling prophecy. So let's look at Google Trends, actually YouTube search in this case, but let's go for web search. So we see that we had the massive recessions, and this is basically from 2004, so that's incredible. When we had the massive crash, look at how many searches for recession. That's the 2008-2009 crash, yeah? So that's incredibly high. We had some incredible spike, very similar in 2020, and guess what? What is happening right now? I'm sorry, I'm actually in the way of this tiny spike here, and I'm actually gonna move myself so that we can really appreciate this little pew, this little, basically, it's happening, guys. Like, people are already starting thinking that it's gonna happen. If you look back, we had something similar in 2011, but back then things were very different. 2017, 18, we weren't thinking about the recession. We had a stock market crash, but it wasn't due to the recession. Here we see something very interesting that is developing, and this is one of the reasons. Now, again, there are more reasons, and we're gonna dive deep into the next one. So the next one is, of course, with inflation, of course, with many other things, we have interest rates going up, and another indicator is the 10-year treasury note interest rate. So we see that, for example, compared to last year, it's day and night difference. So the interest rate is much higher, and that's another indicator that basically tells us that it's definitely better to buy bonds almost instead of stocks. Now, this is not financial advice, and I'm not telling you to buy bonds at all. I never will, probably, because bonds tend to kind of underperform stocks always. So that's the kind of piece of news. But just looking at this chart, it's very bad. And so that leads me to the next thing, which is, so when is it a good time to buy stocks? Now it's probably not a great time. That's what I'm saying straight away. And we're gonna make more videos on this channel to kind of monitor the situation and make sure we don't get stuck in bad trades and when the market is going down. But then, when is a good time to buy? My prediction, based on the data that I have, and looking at this, the most important indicator of all, and yes, I'm not talking about technicals, this is the most important page that you will ever open and keep on your, obviously, browser. This is the Federal Reserve, basically, balance sheet. So we saw, and we've now seeing very much that we are plateauing. So it means that the asset buying is not happening anymore, and we are seeing this very violent downtrending of the market. And of course, this downtrending is not just going straight down, but we have some good days like today, and then some very bad days like yesterday and the day before. So based on how long it took to come out of this kind of hole, I'm thinking that we would potentially now plateau here, and then with the Federal Reserve increasing rates, we are probably gonna be in some kind of recession, depending how violent this recession is. but it could actually last, I would suspect, another year and a half from now, maybe less, maybe more. Take it with a pinch of salt. And so and when we're gonna see finally the market taking off again, and the job market, I'm talking about the economy, everything starting to get going again, well, in that moment, that's the great moment where the Fed will pump more money into the market, and that is the moment to plow basically all your money into the stock market. Obviously, I'm not telling you to just stop eating and do everything just to put more money into it. You know that stocks are very volatile, so invest just what you can lose, of course. And on this channel, we look at very speculative plays, but also safe plays. So stay tuned for more videos. Thank you for watching. I'll see you next time.